So I'm going to assume that everybody here is sitting in front of at least one screen, obviously, maybe two, okay? This talk is not going to presume that everyone's sitting in front of some sophisticated multi-monitor setup. In fact, that's not even the point of, I think, effective trading, although it seems that we're always convinced that we need, 12 monitors to do it. I do have 4, okay? I do have 4, which might sound like a lot, but they're not 4 huge monitors. I don't know how many of you saw my part of the interview about the, I think it was called Day Trading the Euro in Your Pajamas, and saw the layout that I'm sitting in front of and also my epically messy desk. It's not about your monitor collection and your fancy charts. It's really about how you can sit down in front of the computer and get the information you need as quickly as possible. Now, again, depending upon where you are in your learning curve, me telling you to look at 16 to 24 charts or 12 to 18 charts might be extremely unrealistic. But what I would like to at least presume is that you can look at 4 charts that look like what's in front of you right now. I would like, at minimum, for everybody to be looking at least at 4 charts. Now, if you took a look at the interview layout that I had, the photo, the CNN photo, I wish I had it to show you. If you take a look at that CNN photo, then you would know that all the screens on my computers are not all of charts. I might be reading some different blogs. I might be writing on my own. I might be looking at different news feeds and so forth. But again, having 4, or what I call that quad layout, allows you to do a couple things. One, you can compare time frames and market trends. That's a hugie right there, talking about comparing time frames and market trends. Because if you are looking at a pair like the Euro-US dollar, which is what we've got here in front of us right now, you've heard me talk about directional bias, correct? I hope everybody here has. If you don't know what directional bias is, what it is looking at the daily time frame and determining what the momentum and the trend is on that chart. Bear with me one moment here. I'm going to check one more thing, and hopefully the volume will be steady. It seems like some people are having some sound issues still. Just bear with me one moment. Okay, so let me pick up on that discussion of directional bias here, because it's a huge reason as to why I want one of your 4 charts to be a daily time frame. Until or unless you know what the daily time frame is indicating to you in terms of whether or not it's trending or not, up or down, it'll be very difficult for you to understand whether you are trading with the trend or trading counter trend. So the daily chart, while not necessarily the most ideal time frame to trade at any given time, what you do have to remember is that that daily chart is going to give you an idea of the psychological opinion, the mood of the market. And you'll know whether you're fighting a trend or whether or not there is even a trend in place, so whether or not you're dealing with a confused market, okay? So again, just to kind of recap, I know we've had a lot of stops and starts here with the technical issues. I appreciate your patience, such is the challenge of live webinars, but I appreciate your time. We're going to talk about lookbacks and color schemes, indicator settings. I'm going to walk you through my chart setup. So what we're going to do is start off with a blank chart, and then I will show you how you can create a template and then create 4 charts and create that quad setup. It's not difficult at all. So first things first, eventually what I like to use is this white background. Now, I don't know how many of you have noticed on the Daily Forex Trading Edge and also on the different videos that I've recorded that I'm going to a white background, and the main reason for that is the ease of printing. I got a lot of feedback from people who told me that they wanted to be able to print these charts out without emptying their toner ink, and I can completely respect that. I actually like using a white background chart anyways. That's my preference. So we're going to do that. Now, for those of you that do like a black background chart, that's fine. But I'm going to be talking about specifically white here because, again, for those of you that like to print out charts and study them at a later time, maybe even put together a notebook or a binder of study charts, the white background will make life a whole lot easier on your printing. Okay, so let's start off with a basic chart. And for those of you that have never visited the Daily Forex Trading Edge, you can do so by going to www.dailyforextradingedge.com, just as the title of the site is. I'll type it in here on the text, dailyforextradingedge.com. I also want to mention that we have a number of videos available at YouTube. So it's youtube.com/interbankfx videos. Now, for whatever reason, we've been having some issues with the file that is produced from this webinar software and getting that to upload to YouTube. I don't know what the change has been, but suddenly we're having some sort of formatting issue, which I don't want to bore you with, but it's also why we're not getting the videos up as promptly as we have in the past. So I appreciate your patience. But there are many videos that are available at the Interbank FX Videos channel that you can check out. And if any of you Google my name, Raghee Horner, you'll find plenty of material as well. And I'm sure many of you have been to other sites that I've written for and seen the content there as well. So let's just start off with a new chart. Okay? We'll start off with a new chart. So basically, imagine yourself just going to File, New Chart. Maybe you can do this alongside what I'm doing. I chose this very small window today with the hopes that you'll have enough screen space to possibly do some of what I'm doing alongside the presentation. Okay, so I didn't use a very, very large chart today. I wanted to be able to maybe do 2 things at once tonight. Get on your Interbank FX platform and perhaps do this as I'm doing it. Now you notice that I've already created a default chart, which is this the chart you see here in front of you. So with that in mind, let's just see if we can't go to a kind of black background chart and start off with something more like what you would see. So that's probably a little bit more like something you would see. I'm going to delete all the indicators. And if you happen to open up a default chart with indicators, it's really easy to delete everything on the chart. You right-click the chart, okay, and you basically can go down to the indicator listing if there are any active and just do what I did there, delete the indicators that are active. All right. So basically most of you will look at something like this. It's the default blank chart. I'm going to assume at some point by going down and deleting the indicators that are on there, you can get to this state right here, a blank default chart. I want to take a moment to talk about sizing, your chart sizing, because I think a lot of people don't think about that. I nowadays have noticed that a lot of people are getting into more rectangular charts in terms of charts that have a lot of indicators underneath them. They're vertically, they kind of vertically populate the windows. I don't know what you use, but I've seen a lot of different sizes. Some people use more boxy charts. My preference is for something that's more akin to that 16 by 9 view we see on television nowadays. You know, not so much the 4 by 3 of the old tube televisions, but the 16 by 9 of like the HD TVs. Okay? In fact, that's pretty much where my charts are set at. They're very close to like a 640 by 360 HD sizing. So if you're talking pixels, for those of you that want some sort of measurement, it's basically 640 pixels wide by 360 pixels tall. But essentially, we're talking about that 16 by 9 perspective that a lot of you, I'm sure, have seen. The computer monitors are certainly going to that. Televisions are going to that. I'm hoping you're understanding what I'm talking about when I refer to that 16 by 9. All right, so that's pretty much what the sizing is. And quite frankly, the chart sizing you see right now is pretty much almost identical to the sizing of the charts I have on my trading computer. Only I'll have approximately 6 to 8 of them per screen. My screens, of course, for those of you that have seen my CNN photo, know that my screens are also vertical, but you can do this with a horizontal screen as well. I find it interesting that monitors are getting wider and wider, yet the internet is a vertical space. I've always found that very curious, but it seems to be what the trend is, even though it logically makes no sense. I think most people look at the internet to read. We're not all looking at multimedia yet. Computers are going with this multimedia type setting. What's even more interesting is that, you know, YouTube is, I think, the 3rd most popular website on the planet, and they now offer that HD sizing, yet most videos, a lot of videos on YouTube are still at the old default 4 by 3. So we're just in a process of people, I think, beginning to go to that 16 by 9, but that's the sizing that I use. Find what will fit on your screen, and again, I want you to have at least four charts. Now here's how we're going to set the chart up. Very simple. Let's start with the colors first. Okay, again, I'm going to set them up like I've got them here with the white. So I right-click the chart, I go to Properties, and this is the window you see under the Colors tab. I like a white background, I like a black foreground, and I color my grid this Gainsborough color. Okay, so it makes the grid somewhat subtle but still visible. Right? I'm not really going to concern myself with the remainder of this list because my grab candles are going to be what shades in my candles. So I'm not really concerned about any of these. After the background, foreground, and grid, that's all I really need to concern myself with. I am going to go over to the Common tab, which is the 2nd tab there, and make sure that Chart on Foreground is not checked. Very important, especially for those of you that want to use grab. Make sure Chart on Foreground is not checked. That looks beautiful, does it not? Okay, so let's get some indicators on this because we actually need to see our candles, don't we? So if I go to View and I go to my Navigator window, for those of you that are using the newer version of the IBFX platform, and that version is the one that was released in mid-May. I'm using right now the version 4, build 402. You can see it's a mid-May release. The way you can find out what your version is go to the Help tab and then click on About. Now some of you might be on the old Interbank FX version 402 where the logo looks completely different. It might be a green globe. Okay. We want to go to the new version here, and you'll see the Interbank FX logo will be what you'll see in the About tab. And for those of you that have the older version and go to Help and About, you'll know exactly what I mean. But this is what you want to see. And the reason I say that is that's when I know you'll have two things. One, automatically you'll have access to the AutoChartist power stats, AutoChartist chart patterns, as well as the 3 indicators of my grab already in the drop-down menu from Custom Indicators. The other thing that's very handy is that if you right-click the chart and go to Template, the IBFX grab is already a template. Okay, it's already a template within the menu. So it's very easy if you do that. Now, if you don't, obviously what you can do is just drop the G, drop the R, and drop the B. Now, I don't know how many of you are comfortable with putting indicators on your charts. All those types of very, very, very basic tutorials are available at ibfx.com, but it's really as easy as highlighting it and then just dragging and dropping it. That's really it. Highlighting, dragging, and dropping. Okay? And this is the default setting of the grab. The other indicator that I like to have from this menu is the power stats. And I'll add that on there just like that. Now, one of the things I do like to change on the power stats is I'll scroll down under the Inputs tab and make sure that the lime green setting is switched to black. Because the lime green is great on a black background, but on a white background like I have here, it's terrible. So this gives it a nice, easy to see, bold view. Okay. In fact, if you even wanted to, and look, notice I right-click the chart, I go to Indicator List, Power Stats, click Edit, and I could actually change all the colors here to black. Okay, I just want something that's visually friendly on a white background. So you understand chart sizing. These are the custom indicators that I use. The grab candles that I have, my grab candles and my 34 EMA wave are a built-in template on the platform, which makes life easy, or I showed you how to add them manually from the custom indicators drop-down menu within the navigator. Okay. Now this next part is going to be putting in 2 other moving averages. Okay. I go to Insert, Indicator, Trend, and then Moving Average. And I'm going to add a 20-period simple moving average. Now it's really up to you. Sometimes I make my 20-period simple kind of a silver color or a grayish color. It's really up to you. Okay, whatever is more visible to you. And then I'm going to add a second indicator, still a moving average. This one's going to be the 200-period simple on the close, just so you can see here, and I'm going to make this a black one. So what you have here in front of you is the 20-period simple, the 200-period simple. I've got my grab, I've got my wave, and I've got my power stats. Okay. Now, one of the things you can also do is, it may be difficult to see, but there's a small gray caret in the upper, on the upper pane of this window, and you can slide that back and forth. That's your chart shift. I like to have as much of my chart visible as possible, so I'll slide that over so I can see my power stats when I want to see them. And when I don't, I could use my chart shift button again just to push them to the hard right edge. Okay? That's a basic chart setup right there. Now what I want you to do then, after you've completed this, is right-click, go to Template, and save this template. Call it whatever you want to call it. You can replace the default if you'd like. Okay. Now, to make the quad layout, you can just add 4 more charts Okay, now you notice I've got a number of charts already down here. But you can add 4 more charts, so you have a total of 4 charts. I don't care what you open them up as. You can go File, New Chart, open up whatever symbol you want. Okay, once you've got those 4, all you need to do then is go to the Window drop-down menu and tile them horizontally. And what will happen automatically is that you'll get the 4 charts to what I call quad. Okay, it's as simple as that. Being able to look at 4 time frames simultaneously. And which 4 time frames should you be looking at? Well, I'm picking 4, but I look at 6 typically. I look at 6 time frames. I look at the 5-minute, 15, the 30, the 60, the 240, and the daily. Sometimes I'll even throw in the weekly. Okay? So because of that, 4 is the bare minimum. Ideally, it could be 6. And again, it really depends upon how much you're comfortable looking at. I'd like you to start with 4, no less than that, because I want you getting used to the triage process, which is comparing the different market trends on the different time frames. So for example, starting off with a daily directional bias on the Euro-US dollar, I can see that we've been having a lot of bearish momentum, and because the bearish and the negative sentiment has organized, and that is now starting to give us a little bit of this hook in the 34 EMA wave, which I think could be the very early stages of a downtrend. I don't think the downtrend was going to happen until we broke 4,000, and we absolutely did break 4,000 today. Another market that's in transition is the cable. The cable actually is trying to do that same type of hook. And the big level that I was watching for there was 6,000. We're trying to get that below 6,000, create some resistance there, and maybe pull this market into a more established downtrend. Let's talk about look back, because we've got to talk about that now as we're getting into particular time frames. Again, just like sizing, I noticed, was a haphazard thing with a lot of traders, so is the amount of data that was in their window. Okay, there seemed to be no rhyme or reason as to why someone would keep a certain amount of data in their window. And I found that curious because I realized that on certain time frames, certain highs and lows and trend lines and last major moves were more significant within a certain amount of calendar days than others. You know, looking at 2 weeks of a 5-minute chart really seemed completely nonsensical, because certain highs and lows just didn't seem to even be a factor or be respected. And then I realized that a lot of times when you're looking at too much data, you simply miss the value of what's happening right now. Now, this is by no means a magic bullet. This is what I found is manageable for me. This is what I found is it presents me with the most psychologically relevant amount of price data. And that's what I'm going to go back and cover right now as far as look back and market memory. Does anybody have any questions so far? If you do, please type them in. You've got a text box there on your webinar platform. Go ahead and type away. Let me know what your questions are. All I ask is that you keep them on topic so I don't go off on one of my famous tangents here. So thank you. All right, look back. So I talked about this in my first book that was published back in 2004, 3, I don't remember when it was published, gosh. But Forex Trading for Maximum Profit, that was my first book with Wiley & Sons. And it made my mom infinitely happy to have a daughter who was published. And every time I've written a book, I hope that it will really capture what it is that I'm trying to say about the market and the way I trade, and I still struggle to do it. Now, luckily, I have the outlet of blogs and videos and so forth. I'm really getting into video. I've been recording a whole lot more in terms of video. It seems to be just a great way to communicate what's happening in the market. But one of the things that I'm happy I laid out in the first book was the wave and my market memory. So the time frames, again, that I trade or look at are the 5, 15, 30, 60, 240, and daily. And if you notice, they're the ones pretty much that are the popular time frames right here on the platform. You know, they're listed right on the platform here. I don't really look at the weekly that often, nor the monthly. I don't trade off those, and I don't trade off a 1-minute chart either. Weeklies can be helpful sometimes, especially when you're looking at a 4-week moving average or a 200 period simple on a weekly. I will look at those occasionally. Again, a 4-week moving average or that 200 period simple. But for the most part, again, my time frames are designed to allow me to scan and identify what I feel is the most clear view of the market psychology. Because while price action is price action across all the time frames, the way price action organizes on a 5 looks very different than the way it organizes on, say, a 240-minute time frame. It looks very different. And what I'm looking for is that clarity in psychology, which is reflected in, of course, my grab candles and my 34 EMA wave. So before we start triage, we have to figure out what the appropriate amount of data is to view. This data will allow me to draw, I think, the most relevant trend lines, look for the most relevant last major moves, understand near-term important highs and lows, and so forth. Now for a daily chart, I take my wave angle reading and I do most of my drawing or chart analysis or chart pattern identification from a 1-year look back. So the daily chart, I want that 52 weeks, basically a September to September view. Okay? Doesn't have to be perfect. I realize that the sliding scale on any chart doesn't allow you to go perfectly to where you want to be, but you want to get as close to that 1-year view as you can. A little over is fine, a little under is fine, but if you have to err on one side or the other, I think over is better. Okay? So again, that daily chart's super important. It also is going to give me my directional bias to give me an idea of what the dominant psychology is on the pair. All right? Let's go down to the next time frame. This is the first intraday time frame that we're going to talk about. That's the 240-minute. The longest intraday time frame that I'll look at. It's a time frame that I will typically only trade when it is following the trend of the daily. Because if I need to get into a longer term time frame like the 240, I'll even include the 60 sometimes in terms of this longer term outlook. I want to make sure that I'm not fighting the trend, and I certainly don't want to fight the trend on a longer term time frame. Okay, I don't mind going contrarian or counter trend on short term time frames because the expectation for that counter trend movement does not require longer term organization opposite of that dominant psychology. If I'm gonna swim upstream, I'm going to be able to do so only for a few moments. Who here hasn't tried walking up the down escalator, right? Or walking down the up escalator? I don't know. I think we've all done it as kids, right? Maybe some of us have done it as adults. But there's only so long I can do it, right? So my escalator is my dominant psychology. That's my daily chart. I don't want to fight that. And if I am, I'm only going to be able to do so on a very small, for a very short amount of time. So I want to focus on those smaller time frames. The 240, again, the longest of my intraday, the look back here is no less than 4 weeks or 1 month, no less than 1 month, and approximately 2 on the upper end. Again, I have these windows of time for the market memory, for the look back, because I realize that these scales on the charts don't necessarily put us in exactly the look back we want to be in. So this view here would be a minimum. This is basically a 4-week look back, going back to about August 4th. Okay. If I wanted a little bit more, I could slide it one more time to the left, and you'll notice that what it brings me to is now all of July and all of August. So I'm getting closer to just over 2 months. But it's basically 1 month or just over 2 months. If you want to go to the just over 2 months, which is really looking more like about 9 or 10 weeks, that's fine. I don't want you doing more than this. I certainly don't want you doing less than the 4 weeks. So that's why I have that. That's why I'll say, you know, you can have 4 to 8 weeks. 4 would be the minimum. 8 would be basically where I want you at your maximum, because these scales just simply won't slide perfectly. And that's not a problem. That's not a big deal. It's certainly still visually very clear what the wave is doing. Because of the grab candles, it's very clear also what the momentum and sentiment has been. Okay? If you read today's Daily Forex Trading Edge, my discussion today was actually about the cable, which I think is very quietly confirming a downtrend on the daily time frame, giving us a bearish directional bias. And I say quietly because I found it interesting that there's just been so much attention paid to the yen, the franc, the euro, the US dollar, that no one's really been talking about the Aussie. No one's really been talking about the cable. There have been some neglected pairs out there, and it's just interesting to me that there just hasn't been a lot of attention paid to them. Okay, so with that said, let's head on over to the 1 hour chart. Again, if you have any questions, type them in, and I'll address them as soon as we finish talking about the 1 hour chart here. So looking at the 1 hour chart, what I want to keep in mind is this chart is, interestingly enough, not quite a short-term time frame, not really a long-term time frame. Sometimes I'll bend the rules and consider it for a counter-trend trade, but I typically would rather trade with the daily chart's trend, even on a 1 hour chart. I've got the 5, 15, and 30 minute to go counter-trend if and when the opportunity arises. I'd rather follow the trend when it is clear on the daily time frame. I think that's the better way to go, trading with the dominant psychology rather than against it. But there are times we get dramatic pullbacks of a trend, and we can take advantage of that movement shorter term. Okay? All right. So looking at this chart here, again, this is that template that we set up during the early moments of our webinar here. So what I've squeezed in, and what I'd like to squeeze in, is at least 1 week. Okay, so basically I'd like to at least go back to the 1st of September. Okay, and really what would be even more ideal is about 2 weeks. And if you notice here, I've got about 16 days. I'm back to August the 23rd. So this would be the upper reaches of my look back. So for 1 hour, no less than 1 week, really no more than 2 weeks. And this is the upper end of it right here. Again, it's still a comfortable view. Because I have the angle of the 34 EMA wave giving me a look at what the market phase or trend is right now. Because I have the grab candles, and you can see here, notice the grab candles. I have a lot of red, I have some quick bursts of green, and then I have some neutral here. Let me blow this up and you can see it even better. See that? What's happening now, you can see red, blues, and greens kind of in quick succession. Notice the wave is also trying to go sideways. When I lack a steady flow of the same color, grab candles, I usually lack organized sentiment and momentum. When you don't have organized sentiment, you don't have momentum. And when you don't have momentum, it's impossible to really have a trend. You need the organization of sentiment to lead to momentum. You need organized momentum to lead to a trend. I don't have that here, and you can see the wave is basically moving around sideways. Okay? So I can determine that from the wave. I can also look at the grab candles and see that lack of organization of sentiment and momentum. Again, this is a 2-week look back that I've got here, actually closer to 16 days. From this view, I could draw trend lines. From this view, I can see the recent, I think, important highs and lows to know about. Okay? Now, I'm not saying you can't zoom into this. Once you've done your homework, so to speak, looked at the recent highs and lows, drawn your trend lines based upon the touch points, going back 1 to 2 weeks, then if you want to go ahead and zoom in, go for it because you've done your analysis. Just make sure every now and then you go back to that market memory view, make sure that the current reading of the wave is still up to date. Notice if there were any new touch points that you need to consider, reanalyze, refocus, and then you can go back to that zoomed in view if that's more comfortable for you. Okay? And I'll do that throughout the day. The 30-minute time frame, the look back is a week. Okay? If you get more than a week, I think you're probably creeping into more information than you need. If you're a little less than a week, I think you're going to miss out on some important information, but this is what you have here right now. This is the 31st to the 8th, and you notice I'm just a little bit more than a week, just a couple of days. That's a fine view. Okay, again, we're not such sticklers that it just has to be 14 or 7 days. I would rather you be on the side of a little bit more data than less. Here, my choices were either have basically 3 days, okay, or have approximately 9-10 days. I'd rather have the 9-10 day view. Hope that makes sense to everybody. 15 minutes, 3 to 5 days are fine. So right here we're in the minimum look back, and on the 15-minute chart I find myself usually on the 3-day view, more so than the 5-day view. Okay, so usually on the 15, 3 days is fine, and that's usually where I keep it at. Okay, if you have a little bit more than that, that's fine. 3 to 5 days for the look back, the market memory, and the 15-minute chart is fine. The 5-minute, the one that I trade between the greens pretty much only, 1 to 2 days. And this is pretty much what you'd be looking at to keep the wave. And remember, throughout all this, why are we so focused on market memory? We want to keep a consistency in the view that we're keeping of the market. We want to respect where the market's been, therefore have some insight maybe into where it's going. We want to have an idea of the last major rallies and sell-offs, the significant touch points from which we will draw trend lines and horizontal support and resistance, Fibonacci retracements and extensions. And I want to keep a consistent view or reading of my wave. That's really where the market memory came into for me initially, which was how do I keep a consistent reading of the wave from time frame to time frame? Because, for people who have, views that are more common to this, what's this wave reading here? Right? Let's go to that 4-hour chart. This wave reading looks like it's going down, but not decisively so. You put it in the market memory, and it's very clear that we're dealing with that 4 to 6 o'clock downtrend. So for me, the look back in the market memory was really a part of not only drawing trend lines, okay, but also, and really initially, most importantly, keeping a consistent reading of my 34 EMA wave. Okay, and the reason the grab candles came about is because when I did sometimes have a relatively scrunched view like we have here, having the color-coded candles that are based upon where prices are closing around the wave gave me another layer of visual understanding of what that sentiment and momentum was that could lead into a trend. That's where when I look at this daily chart, I can see all that bearish sentiment and momentum that recently transitioned. We were bullish, we went neutral, boom, then we went negative. And I can see that even within this very scrunched up view of the cable. Okay, now if I zoom in, I think it's still blatantly obvious, but I want to keep that I want to maintain that angle of the wave, and therefore that market memory is so important. But having the grab candles helps. Again, everything for me is as visual as possible. What are the determinations? What are the decisions I can make at a glance to keep my analysis consistent and to keep it moving along quickly? Because there's so many time frames to look at. There's so many pairs to look at. How can I just make a determination about this pair and this time frame at a glance. The grab candles and the wave allow me to do that. Okay. All right, so let me answer a couple questions, and then we'll go ahead and transition into the different indicators that I use and how I set those up in terms of the settings there. All right. So hopefully I answered the question about where to access the daily Forex trading edge. In terms of time frames, hopefully I also answered that in terms of my preferred time frames. The 34 is based upon a Fibonacci number. We have plenty of video on that back on the Interbank FX trading videos site at YouTube. But Forex is a Fibonacci number, and I basically tested the series up to 1597 to find a setting that would act as dynamic support and resistance and also give me a visual footprint of the trend. And the way I measure the trend, for those of you that are new to the way I trade, is it's absolutely based on what is basically century-old Dow theory. Charles Dow's writing on what he called market phases and market trends. Completely inspired by that. How can I identify those market phases and trends? How can I have a visual footprint? And that's why the 34. And of course, I'm a huge fan of Fibonacci numbers. And that's where that came, to kind of give you a Cliff Notes version there. So thank you for your question there, Maurice. And also Todd, thank you for your questions before. As far as this being recorded, I'm crossing my fingers. It should be, my friend. I hope it is. I clicked on the button, but as I mentioned, we were having some technical issues. But it is, as far as I can tell from my end, yes, it is being recorded. Then the 6 time frames that I like. Again, acknowledging that some of you might start out with the quad setup. By the way, if you do start with the quad, focus on the 15, 30, 240. I'm sorry, 15, 30, 60, 240. You can look at the 5-minute if you want to stay very short term, and then you can take one glance at the daily and get your directional bias. So again, if you're going to be looking at the quad setup, 4 charts, 15, 30, 60, 240. 5-minute only if you want to trade very short term, and the daily you can just glance at to get the directional bias. Okay? The template I'm using is one that we created together at the very onset of our time here together. And again, if the video is recording like I hope it is, you'll be able to watch this and also recreate it on your own. It is a template that has, and I will go into the indicator list for those of you that are comfortable setting up your own templates. I've got the IBFX grab, 3 IBFX grab indicators, the G, the R, and the B. For those of you that are unfamiliar with grab, it stands for green, red, and blue, and it's what color codes my candles according to the 34 EMA wave to give me insight into sentiment and momentum, to give me that visual footprint we were talking about. You notice I've also got the power stats. I've got a 20-period simple moving average and a 200-period simple moving average on this chart. And then what I did is I went ahead and saved it as a template. That way when I open up a new chart, it's as easy as a right click, activate the template that I want to activate by going into the template drop-down menu, and I can have the indicators that I like on any new chart. Okay? All right, so in terms of power stats, I do have a past webinar on power stats that I'm hoping will be available at the channel. I mean, I think we did an entire talk on power stats and trading times. In fact, if you go to the YouTube channel, we might have a webinar that is already posted, and I've talked at length about the importance of understanding the rhythm of the trading day as well as trading times, and that's where power stats fits in. I think that it is available. I'm just not 100% sure that it's posted, but if you head on over to Interbank FX videos, the YouTube channel, I'm hoping that it's there. Because like I said, that topic alone was covered in its own webinar. It's a great tool. Suffice to say, if you watch that, you'll understand why I keep it on all my charts. But just to let you know, I think it's very important, support and resistance. That's one of the reasons I keep it in all my charts. It's a very unique view of support and resistance, in my opinion. Okay. All right, so let me see. We're going to go into the indicators. All right, and then I'll tackle a few more questions and we will call it a night. All right, so the indicators that I like to use, and obviously moving averages and my grab and the power stat, those are indicators. But when I think indicators, at least in my mind, I'm really talking about the second pane. And what I mean by that is the lower pane, the second pane of your charts, the lower indicator window. Okay. You know, again, obviously everything we've overlaid on the chart so far is an indicator. Okay. But to me, those are indicators that give me better insight into price, while the second pane indicator confirms what I'm thinking about price. Okay, let me say that again. The indicators that are overlaid on my upper part of the chart, the price window, if you will, those are there to help me analyze price, determine sentiment and momentum and trend, give me better visual footprints for more consistent, less emotional, less biased, and more, again, more visual analysis. So, but it's really about price, determining what price is telling me. The second pane is about confirming what I've seen in the upper pane. So the second pane is always the last step. A trade doesn't start off with the second pane, whether it be the CCI, stochastics, or the MACD. Those are my three preferred indicators, and I'll tell you when I use each one. Again, they're there for confirmation. Trades do not start off in the second pane. They start off on the first pane. Okay? So in terms of the settings of my CCI, I use a 20-period CCI. Basically, the way I learned CCI was on a lunar cycle, which is why I use that 20-period setting. Notice that I make the signal line, the red line, which will signal whether or not we're above positive 100 or below negative 100. Very bright. Okay, find a color that works for you. Okay. Notice also that I've made the levels, negative 100 and positive 100 levels, dark and solid in terms of the color, because I believe the initial setting is a dotted line, and here you'll have a solid line and black. So again, make them so they're visually easy for you to see. Very important. Very important. Okay? The next indicator we'll cover here, let me just delete this. The next indicator we're going to cover is inserting. You can do one of two things: the moving average of oscillator, or you can add Interbank FX's MACD traditional. Both those indicators are momentum indicators for me, and the MACD, for those of you that have watched some of the past videos and I discuss momentum trades, they're really designed to help you determine the momentum of a move through support or resistance. So the CCI is used exclusively for the wave reversal. By the way, today on the Daily Forex Trading Edge, I actually gave you an example of a wave reversal that occurred today. Okay? I actually gave you an example of the wave reversal that occurred today. And you'll notice that the reading of the CCI was below negative 100, and the price action was breaking through the bottom line of the wave and the 6,000 level. And again, if you read that update, it's an example of the wave CCI, or what I call a wave reversal. Again, the CCI is used exclusively for wave reversal entries, like I gave an example of at the site today, the Daily Forex Trading Edge site. The moving average of oscillator, or the MACD traditional, is used for momentum trades. So if a pattern like a triangle has developed and we're waiting for price movement above or below it, when the price breaks what is a coiling market or a sideways market, I want to confirm whether or not there is breakout strength behind it, and I use the MACD to confirm that. Okay, to prevent myself from getting into a whipsaw situation. Now, of course, nothing is foolproof, but I find that it does filter out oftentimes some trades that I was glad that I didn't trigger. And I should also mention it's filtered out trades that I wish I did. But the filter is meant to catch things, and sometimes it catches things that I may have wanted to pass through. But in my mind, what I want to do is look at my trading and pursue it in a way where I'm looking for a reason not to take the entry. I'm not looking for reasons to take the entry. I don't want to be looking just to confirm what I want to do. I want the devil's advocate, if you will. I want that other side of the coin. I want something saying, well, maybe that is not a good idea. Again, filters. So my moving average of oscillator settings, or the default, as you can see here, 12.26.9. All I really do is I make the color black, and I thicken the lines up a little bit. Again, just in the interest of being able to see a little bit more clearly whether or not the reading is below 0 or above 0. That's all I'm interested in. Just like the CCI, I'm only interested in whether or not it's above the 100 level or below the negative 100 level. I keep my interpretation of these indicators at what I call on-off, as simple as possible. I should be able to show the 8-year-old that lives across the street and ask her, hey, is this above or below a 0 line? If they can read it, I've kept it as simple as possible. If it's too complicated for an 8-year-old, I don't need it in my life in terms of that conformational indicator. Keeping it simple, keeping it quick. The last indicator that I add, and again, gang, the point of today's talk is not a discussion about necessarily Forex specifically. It's really about getting your chart set up, period. You know, how to create that template, which indicators I use, which settings I use, market memory, market look back. So it might be a little different than other beginners webinars that you've attended or seen in the past, and perhaps for some of you it's a little bit too quick-paced, and if it is, I apologize. I often want to squeeze in probably more than I should in an hour. That's definitely something I'm guilty of, for sure. You know, when I get you guys here in the room, I know we only have that one time a week that we get to talk. Yeah, perhaps I probably do squeeze in more than we should, but I just want to be able to give you as much information as possible, knowing that later on you can review the recording at your leisure and at your own speed. So the last indicator, as I mentioned, is the stochastic indicator. And one of the things that, again, I hope you're getting from each one of these indicators is there's a particular market environment, a particular situation that I like to use each one of them in. So the CCI was to confirm wave reversals when a trend is shifting from up to down, my wave reversal entry. The momentum is to confirm momentum, the MACD is there to confirm momentum trades. When there's a breakout or breakdown through support or resistance, I want to gauge how much momentum there is behind it. Okay? The stochastic is used, and again I use a very slow 21 setting. You'll notice I use a slow setting on the CCI as well. And as I mentioned, that CCI 20 setting is based upon a lunar calendar. That's the way I was taught it 20 years ago. So that's the setting that I've continued to use. that slow lunar calendar setting. I'm not fond of quick settings on indicators. I find they're too twitchy. Okay, that's just my preference. So again, 1226.9 on the MACD. This is actually a signal line. I'm sorry, the MACD was 1226.9. The stochastic is 21. Again, a very slow setting. And here, all I'm interested in, very similar to the CCI, is whether or not it's over 80 or below 20. Okay, over 80 or below 20, because what the stochastic oscillator does is it gives me insight into whether or not a market is overbought or oversold. But I'm only asking myself this question when prices are in a wide volatile range. Within the context of a trend, that question is really unnecessary and ill-placed. I'm never going to ask myself in an uptrend if something's overbought. It doesn't make any sense. If there's a trend in place and the bullishness is dominating, don't look for a ceiling. You know, your emphasis should really be on the floor and how to buy into the psychology, which is obviously carrying a market higher. Ask anybody who felt the franc was too low, or the yen was too low, or gold was too high over the course of the last year. You might eventually be right, or you might eventually gut your account trying. It's just a fact. So I'm not interested in top picking. So realize, in the context of the stochastic, I'm really trying to focus in on a sideways market, what I would call a 2 to 4 o'clock angled wave, one that's bouncing back and forth. The euro was that way for quite some time. The cable was that way for quite some time. Okay? It's arguable that if you look at the dollar yen right now, it'll be interesting to see, but it's arguable right now that the dollar yen is in what could be that back and forth at the bottom of its daily chart downtrend. Okay, could the dollar yen be becoming overbought? Well, I'm looking at a market that could arguably be turning into a sideways range-bound market. Okay. All right, so with that in mind, those are, again, my, I got a question about crosses. No, I don't look for crosses typically, Bill. Whether it be on, well, typically for the stochastic, I don't look for crosses. On the MACD histogram, I'm just looking at the histogram bar to see if it's above or below 0, so either a positive or negative reading. And when it comes to the CCI, again, above or below the positive 100 or the negative 100. So thanks for your question, Bill. Again, you know, this is a discussion for, I guess, beginning your chart setups. As far as beginners to this platform, you know, obviously if you have some questions about how to set up some of the things that I've done, you can certainly access customer support. My goal here was to discuss the chart setup and the tools that I use, because for the remainder of fall we're going to build on this using the same view and discuss more about my individual entries and exits and profit targets and analysis. So I thought the first webinar for September would ideally be suited to showing you what it is you're going to be looking at for the next few months in terms of the chart view. Okay? All right, so everybody, thank you very much for your time. I know we've gone over about 10 minutes, but I know we were delayed on the start for about 5 or 6. So again, thank you very much for your questions. I appreciate them, all of them, very much. Hopefully we can continue to build on this conversation. And I will see you all, I believe, next week. I'll be at the Las Vegas Trading Expo the 22nd and the 23rd, so we won't have a talk the 4th week of this month, but we will talk next week. So I hope to see you all there, either in Vegas or here in the webinar room. Of course, you can check out the Daily Forex Trading Edge I typically try to get an update out before noon Eastern Standard Time, but it really depends upon when I'm able to get some good analysis on the current story and setups of the day. I typically do tweet the update of the Daily Forex Trading Edge on my Twitter account. So if you want to get an update in that regard, you can follow me at Twitter or Facebook. Okay, I actually update the Daily Forex Trading Edge on both those, and my account for both those is Raghee Horner, for both of them, for Twitter and for Facebook. So thank you very much. I appreciate your time, and hopefully I'll see you all next week. Okay, everybody? Take care.